I made a jump and got into specifically paid media and SaaS in around 2005. A couple of years later, started my own business with some wonderful partners, and that business sells SaaS software to large enterprise agencies. Grew that business to more than $1 billion.
My name is Kevin David, and if you want real financial freedom for yourselves and for your loved ones today, then the time is now. And I will be there to help you every step of the way. What is up, guys, and welcome back to another exciting episode of the Kevin David Experience, your favorite podcast or soon-to-be favorite podcast. Today we have a very special guest, and I know I always say that because it's always true, but very quickly, like always, big shout out to the people who left us a review on iTunes, and an even bigger shout out to those of you 1%ers who are actually sharing the podcast with at least one other person. It's how we grow, and we appreciate you a lot. So today we have a very special guest, Erich Wasserman, joining us from almost my neck of the woods in Florida, over in Orlando. So Erich, the first question that we ask everybody on the podcast is to describe your entrepreneurial journey all the way up until right now in 60 seconds or less.
Yeah, Kevin, thanks a lot. Thanks for having me here. Really a pleasure. Congratulations on your journey to this point. In 60 seconds, let's see. I grew up in Miami. Went to the University of Virginia, and straight after that, joined a nonprofit where I learned that nonprofits sell to donors instead of selling products. So got my start in the nonprofit world, specifically in the civil rights and civil liberties world, and then made a jump, which doesn't make a whole lot of sense in retrospect, but I did it anyway, into digital marketing, and got into specifically paid media and SaaS technology in New York City in around 2005. A couple of years later, started my own business with some wonderful partners, and that business sells SaaS software to large enterprise agencies and their brands. Grew that business to more than $1 billion in turnover. Lived around the world. Grew our business outside the United States to a significant portion of its overall global revenue. So seen a lot of the planet. And then last year left digital marketing to start a venture fund in crypto and blockchain, and I'm having a blast. So I don't know if that was 60 seconds, my friend, but it's been a long life, and I tried to condense it.
No, I think that was actually very perfect, to be honest.
Thank you.
And it's funny because I found, or not found, but I was like, so one of the things that I'm working on like personally right now is a project where I'm trying to kind of look for patterns amongst like unicorns and companies that have had like really significant success. And one of the companies that I came across was MediaMath, right? You guys, hit unicorn status. And correct me if I'm wrong, in the last couple of years, like 2018, if I remember correctly. I've looked at a lot, but it's really exciting having, you're one of the few people in the entire world that has created $1 billion company. So it's like that. Do you ever kind of just like stop and think for a second, like, wow, that's like really weird that I'm like one of like maybe like a couple of thousand people that have ever done that?
Brother, I think about that all the time. I think about how lucky I have been. I think about a great deal of work, just an extraordinary amount of work, trying to keep sane through all of it, really. Like the path to $1 billion is jagged and up into the right, but it's tremendously fulfilling. I try to reflect on some lessons that I've learned. But yeah, man, I overarching gratitude to all the things that enabled me to get to where I am. And, I think the top of that list are wonderful people that I've been fortunate to surround myself with to get there.
Yeah. And so when we go all the way back to the beginning, how long ago did you guys start MediaMath? Like when was it founded?
That was in 2007. And that summer was pretty interesting. So it was that summer that Google acquired DoubleClick. It was that summer that Yahoo acquired a company called Right Media. It was that summer that Microsoft acquired a similar business to those. And broadly speaking, those were ad exchanges. These were the first commercial software solutions that enabled publishers to sell inventory at variable prices. So you had these like stock markets almost that cropped up.
Right.
There's about $10 billion in corporate transactions that summer. And my partners and I saw an opportunity to create software that accessed those exchanges and that provided machine learning and intelligence to make accessing those exchanges easier and more profitable for users. And so
Right.
that was that was a perennial moment for digital marketing and paid media in particular.
Yeah, and so was there anything like that? Like even like did you have any competitors to compare yourself to, or was it like literally a brand new idea at the
It
time?
was a brand new idea, owing to the fact that exchanges really hadn't existed for very long, and if they did, they were relatively small scale at the time. Um, and this sort of relentless advance of technology, right? This is another big moment for the internet, for the economic engine of the web. And so we were first to market, and that was awesome for a little while. It was really exhilarating, both in the ability to sort of go to clients and partners with a new idea that they had never heard of, and also to sort of see the fruits of those efforts reasonably quickly. I will say, however, relatively shortly after we started, a little company called Invite Media started in Philadelphia, and they quickly exited to Google. I want to say a couple of years after that. So we were kind of perplexed at the time, um, because we just sort of thought this opportunity was so big that exiting early just didn't really seem like a terribly awesome idea. But good on them, and they got absorbed into the Google machine, and those guys went on to do lots of fun stuff. So at the beginning, it was just us, and then we had a competitor. And at first, that was like exhilarating too, because it was confirmatory of our business thesis. Like, oh, well, others think they can do this too, and that's pretty awesome. And then it got annoying because we had to actually compete and try to win business off of them. So,
Yeah.
so
So for
yeah.
people who don't understand, like what exactly is the problem that MediaMath solves? Like literally, like what does it do? How do you guys make money? Just for people who may not have heard of it.
Sure. So to be clear, I left that business in 2019, but it still thrives, and they're doing great, despite some hard times in the last year or so for everybody, really. Um, so yeah, so the world we know, that is the publishers and the applications that we access through multiple devices, is really a nightmare for marketers. Marketers trying to gain access to audiences, they're encountering more and more um, kinds of media and devices that they need to sort of penetrate in order to get to the user. Um, and doing that sort of, if you can imagine, manually, like I'm going to try to do that by device, by channel, by media type, like that's insane. Like that's not why we have technology. So the platform we developed is a terminal where you can access all of the breadth of that liquidity of inventory, in order to find the users that matter to your brand and market to them, and hopefully sell a lot of product, and grow your brand equity around the world. So really meant to sort of simplify and create better ROI for media investments. And that problem got, as I'm saying, like a lot more complicated over time. When we started in 2007, this was sort of like you're just getting some cool laptops, but it wasn't a 10 device per person world, right? This was a far simpler time. Seems like ages ago. And now, of course, trillions and trillions of ads fly around the internet, or I should say, ad opportunities flying around the internet. And so, if you're a marketer, which one is the right one for me is it's $1 million question.
Right. And then when you think about how like when you're starting a startup, right? Did you guys ever like change when you were there? Did you guys ever change like the charging or the kind of how you charge your customers? Like or did it always kind of was it obvious what it should have been, or did you make mistakes? Or what's your opinion about like the freemium model? And did you guys do it, ultimately right, or are there ways that you would have done it differently?
Oh man, pricing and packaging is like a constant conversation. It's a good one to be having. It's good to listen to your customers, to listen to the market. There's just no such thing as a stagnant business. If you're stagnant and you're not growing, you're probably dying. So, and part of that is like, how do you align best with the needs of your customers? When we started our business, um, the world was very opaque in terms of how paid media was accessed. So you'd buy on a CPM or you'd buy on a CPC. These are metrics to make it easier for marketers and their agencies to buy lots and lots of media. In any event, behind all those prices were a lot of fees sort of jammed in, right? And part of the opportunity that we saw, um, was to make more transparent the buying process. What am I buying? Where am I buying? What are the attributes? What are the what are the important things I need to know about the media that I'm buying and the users that I'm actually buying. And so we tried a new model, and it was tough. That model basically said, look, we're going to charge a percentage of everything that you run through our platform. And that had really never been done in the paid media industry. People were sort of used to a certain pricing model. And so I guess you could say it added to the excitement of selling and of growing the business, but it's also really hard. Like you're at once trying to educate a customer on what it is that you do, how it is that you do it, why you do it better, and by the way, you're going to have to buy this in a slightly different way than you may have thought about when you were budgeting for the forthcoming year.
Yeah.
But all part of the fun, man. All part of the fun.
And like doing it and having kind of the ability to look back now, like what were maybe some of the biggest mistakes you made, founding MediaMath and just kind of growing it, from nothing to $1 billion company? Like what would you have done differently?
Yeah, it's a good question. I would have done a lot of things differently. I would have expanded internationally more quickly than we did. I think companies generally wait thinking that like some magical moment is going to compel them to go after the rest of the planet. And it turns out like the rest of the planet is really big and there's a lot of opportunity. And, the United States really does have a pretty good reputation for leading technology development around the world. So that's one thing I would have done differently. The second thing is sort of, and we try to do this, and I think everybody tries to do this, but aligning on who your customer is with a ton of specificity. So, who you're building for and who you're trying to attract manifests itself in the way that you hire. It manifests in the way that you build your product. It manifests all the way down to how your knowledge base is populated with different articles, right? Like, and it's easy to sort of see the next bright thing, right? It's the sort of squirrel movement where the squirrel's kind of looking around and gets distracted because that thing looks really shiny. But those small deviations from plan can lead to massive changes in the presentation of your product and in your go-to-market. And so like rigorous attention to the health and vitality of a specific thing that you can do, so long as that market is big enough, right? So long as the TAM is big enough to justify that investment, which turns out like digital marketing is, and the major constituents of like agencies and advertisers, like, it's a pretty big market. It's now, of course, the economic engine of the internet that we know. So,
Right.
so yeah.
And then as far as like hiring, right? Because like, the more founders that I talk to, the more patterns that kind of emerge, right? Especially like ultra successful founders like yourself. And everyone always says the most successful people always say that the number one most important thing is people, right?
Yeah,
And so like
100%.
what are some lessons that you've learned about like really differentiate? Because like, some people are good at interviewing, but they're not great employees. Some people are bad at interviewing and they turn out to be your best employees. Like, and while there's no exact science to it, are there any, patterns or insights that you can give, my listeners as to how you really find like really talented people for your business?
Yeah, I think it's a strange answer, but you're probably going to get it wrong is my first answer. Like the reality is as to your point, like some people really present well and them through someone else or the resume comes in and it seems so awesome. It's very likely the case that past indications of success are future indications of success, but not all the time, right? So many variables go into whether or not a top performer is going to be a top performer in your business, selling your product, engaging in the in the activities that you need them to do. So you're probably going to get it wrong. I learned a great deal from working in markets outside of the U.S. in this regard, and I'd love to see the United States sort of adopt practices like they have overseas, where there's sort of an agreement. Not sort of, there is an agreement as between the employer and the newly employed, that if things don't work out, there's a period of time where you sort of part ways and it's amicable and you're paying them if you're the employer. And like, it's a wonderful way to be able to sort of test and learn from each other's experience. And like at first blush, it might seem like it costs money to like, why am I paying somebody who is no longer working for me? But in reality, the cost of bad talent and the cost of keeping people around who are dragging your organization down is enormous. And I think through experience that you know mechanisms like that can be really helpful, especially for organizations that are growing quickly. Like if you're trying to double your staff in a year, which is common, and I think as we come out of COVID now, you're going to see a lot of companies looking to grow really, really quickly. Like, be aware you're probably going to mess it up, and you're probably going to mess it up pretty badly. Don't follow the the employee down. Like, don't ride the market down. If you know that it's bad, it's like a bad relationship, right? It's like I've known this relationship is personally has not been good for a while. It feels so good to get rid of it when it's done, right? And to part ways. Go with your gut on that stuff and be as amicable, I think, as you can, because that amicability, I think, also pays off in the culture that you create and the culture of performance understanding and of responsibility. So yeah, that was a bunch of stuff, but like my
Yeah.
overarching point is like don't make good decisions, realize you might get them wrong, and take responsibility for them and try to correct them sooner rather than later.
Yeah, and another, yeah, it's a great answer. And another thing that I've been hearing again and again and again, because my what I enjoy reading is like autobiographies of really successful entrepreneurs and business people, and I keep hearing again and again that like having your employees and your team having skin in the game in like some way, like especially like officially, right, it is one of the most like important ways to kind of keep people like truly motivated in a way that's like difficult to duplicate otherwise, right? And then the other side of that coin is, well, no founder or business person wants to give away any equity, right? And so like, what's your opinion about that kind of dynamic, and which do you lean towards?
Yeah, I generally lead toward being more lavish in ownership for the right positions and for the right people, because I do think, and I've witnessed it. You know, the people who are most invested are the most invested. Period.
Yeah.
And like, and I think that I've seen. I'm an angel investor myself today, and I see a lot of cap tables, and I see how people think. Um, and my overarching thesis is the gains that you get off of a larger top line, that is a larger business, with maybe slightly less equity as a founder or as a founding team, are they can be astronomical, and that happens when you have created a values aligned workforce. You've created an understanding that when this company grows, you're going to grow right along with it. And that's a hard thing to do. It's hard to keep growth going. First of all, it's hard to keep the right people motivated. It's hard to hire and replace really top people who have that fire in the belly. And that churn, again, it's one of the ways in which value deteriorates over time. And if you can sort of goose that with really good incentives and a thoughtful communications plan around those incentives, by which I mean, like, it's not always clear in private equity how much your stock is worth, how much your long-term equity is worth at any given time. Like, you haven't had a transaction, you haven't had outside folks validating what the ongoing value of your equity is. But like, it's a good, healthy conversation, because it's definitely in the minds of your top talent, because they're probably getting poached all the time, or folks are trying to hire them all the time. So it's definitely
Right.
top of mind for them, and it should be top of mind for you. So I really think that the sort of models I've seen where the CEO takes 95% of a business, it's short-sighted. The last thing I'll say on this is, like, it's obviously heavily dependent on the kind of labor force you need and the kind of talent that you need. But for the businesses that you've been involved in, for the business that I have, like, folks in technology, it's a rarefied and specialized skill.
Yeah.
So go for it, and I think the rewards come as a result.
And first of all, again, great answer. And second of all, for people who are listening who may not have as much experience as you do, which is probably almost everyone, like, can you give some like very specific examples of like what types of positions are worth equity, and like what percentage of equity that you might give someone? I know this is a difficult question because it depends, at what stage and things like that, but just some general answers so people have like a ballpark in mind when they're starting companies as to like what a realistic amount to give away is at what time for what positions.
Yeah, it's a really tough one, because and I'll try not to stay on the tough answer, but it is situation specific, and it depends on your revenue model. It depends on uh, the level of automation that you have, what kinds of sales you need to be making, what kind of relationships are necessary to make those sales, what the talent pool is for engineering support, right? What the talent pool is for the kind of capital management that you need. But so with all that said, uh, there's a reason you create a C-suite. There's a reason you create a leadership team, and in general, those are the people to focus on first, um, and disproportionately. And that's not new news to anybody listening, I'm sure. I think that, however, um, the values that the business enunciates for its employees are really important at that stage too. So, what are you as an employee, sort of moving down the ranks from sort of C-suite to management into sort of, we'll just call it the rest, though that's not a very nice way to say it. You have people have to come to work every day and be motivated and be excited. Typically you have equity on the table, you have cash on the table, you have some sort of performance related bonus on the table. Um, and look, discreetly, like, uh, it's not terribly difficult to get market comparables when you're trying to figure out how much to pay somebody, right?
Right.
And when you do that, what you're able to do is sort of triangulate based on my revenue forecast, based on my cash position, based on potentially how much money I've raised, whatever that looks like. Um, how can I leverage those assets together? And the answer comes from doing that math. Like when I sit down with somebody really discreetly, and this is not only a good thought exercise, but it's the actual exercise. You sit down with somebody and you say, look, this is what you're going to get out of working for me. And over time, what I want to make sure is that you have an eye on our overarching growth year over year. And I want to make sure that you're feeling good about the value that you're creating every single day during that year. So I guess that's a long-winded way, Kevin, of saying I'm a fan of equity for everyone. I think that, again, with the caveats above, like it kind of depends on your business. The more people who are rowing in the same direction for longer periods of time is a wonderful place to start. And if you have to iterate and innovate that model over time and be more choiceful about it, that's a wonderful way to grow as well. But like first principles, like get people on the train, get the fire in the belly, and keep people motivated. And I think properly sort of put together, these are really good instruments to be able to compel, the best work you can get out of people.
Yeah, I agree 100%. Right. And I mean, there's kind of like an equation where if you look at comparables, then you either give them more cash or more equity or more performance based, and you kind of like balance the three to be like somewhat similar to what like a really talented person might be able to get on average elsewhere, depending on what stage of the company you're at, either giving them more cash or more equity, whichever, is more abundant and kind of more available to you. So last two questions for you. And then the last question we'll get into Senary because I'm interested in that. But the last question about, general kind of entrepreneurship and startups is, what's your opinion about raising money? And what I'll specifically say is, to me, right, having founded, multiple different multi-million-dollar businesses, no billion-dollar businesses yet, but maybe someday. But for me, right, what adds additional complexity and sometimes headaches is more people, right? Like people are very unpredictable compared to technology, and with the right people, everything's great, but it's difficult to avoid potentially getting somebody who's wrong. And so there's businesses like U-Haul, right, which has like tens of thousands of people and all these cars and depreciation. And then there's businesses like Clubhouse, right, that has 6 employees and is worth $4 billion. So like in your mind, when is raising capital, worthwhile, and for what reasons, or is it ever? And how do you actually focus on, what I like to call kind of the golden link in the value chain, right? Like, for example, selling a plane ticket. There's the airport that has all the employees' expenses and headache, and there's Expedia who actually makes more per transaction than the airport with a much less difficult business. And so I know I kind of asked a lot of questions there, but I guess the thesis is, what's your opinion on raising money, and how do you find kind of a more preferential business model instead of one that's more headache and laborious?
Yeah, I hear you. Look, take a step back. Like, implied in all your questions there, which are all awesome. Like, what excites you are highly leveraged technology businesses. And so you're
Yeah.
going to focus your passion and energy on like how to make those work, because to your point, like more people, more problems, right? That's that. And like, that's how you feel about it. And that's cool. Um, Someone else loves the service heavy business because they want to inspire a workforce to, take on the sort of one-on-one customer support that's required, and people need help, and like moving is a pain, and like all that stuff, right? So you sort of start with what motivates you as an entrepreneur to do the thing.
Yeah.
At which point, like the questions you're asking maybe become a little bit south of that or derivative of that, which is to say, like, well, look, if I'm operating a highly leveraged technology organization and I know that my costs are going to be de minimis relative to my scale, and I see a market opportunity, like I either have deep pockets or I know some really cheap engineers and software developers, and I'm gonna like fast track that technology to market and not have to raise a lot of money because my revenue projections say, I'm gonna be able to market myself on Twitter, and like it's gonna go viral. It's gonna be amazing. So don't do it if that's your thesis, and that's like super awesome. And give me a call if that's what you're working on. Uh, but on the other hand, that same story could be told differently, where you got a highly leveraged model, but it's a highly competitive, market, and you want to execute some price leverage, strategies. You want to hit the ground running in regards to your marketing. You want to get in front of the sort of most leveraged sales opportunities you can, and everything I just said, just ching ching, like it just costs a lot of money. And so, mindful of your revenue projections, what can I get away with in terms of sort of selling that value, selling equity? So, yeah, man, like it's what motivates you and where do you want to be and where do you want to go.
Yeah.
Money, as with all other tools, is just that. It's a tool to help you to get there. Um, it's one that can be pretty costly, right? You over leverage yourself and sell too much of your business, and you look back and you're like, I didn't actually need that $10 million, and now I'm pissed off because it's worth 100 billion.
Yeah.
And by the way, I have a board that I have to report to every week, and like I didn't even really like that guy.
Yeah, no, I mean that's a perfect answer again. I mean, and I think I revealed my hand too early with like the kind of way that I asked it, being obviously biased towards one rather than the other. And so the last question I'll ask you is a question we ask all ultra successful entrepreneurs, which is also relates to your new business, which is a blockchain venture fund, which is, what should people be focusing on going forward? Like, what are the trends that in 2 to 3 years from now are going to be the next big thing? And obviously you probably feel like blockchain is one of them, but maybe more specifically, like, what are the opportunities out there that you're excited about that, an 18-year-old, a 21-year-old, a 25-year-old, or someone who's any age and who has the entrepreneurial spirit might be able to start working on now that could be a huge opportunity in the future?
Yeah, look, yeah, Kevin, unsurprising, my answer lies in technology and distributed technology. And look, I think we're in a moment of crisis as humans. Like you can look at that in the little sense, which is like technology and privacy and our relationship to our devices, and lawsuits against the biggest tech companies we know, and more sort of the understanding that there is a trade that we're making when we use technology, and that trade isn't necessarily terribly fair. And it manifests as in politics, it manifests in the way that we see the world, and sometimes that just isn't very good. So writ large, there's like a technological revolution in the middle of course, a global health crisis, which has generated more liquidity crisis, which and then you've got climate. Like this is like it's a pretty dark time if you want to kind of take all things considered. And so I feel like we are learning some lessons as humans right now, and it's kind of up to us whether or not we want to ingest those lessons and do something with them. I think that if I'm 18 and taking that into account, by the way, if I'm 18, I'm 43 right now, but if I'm 18, I'm looking at an economy that's like never worked. I'm looking at a political system that's never worked. I'm looking at a stock market that is like, I don't even understand it. I'm looking at job opportunities that may not be there for me. And so I'm kind of like, this is kind of a bum deal. What the hell's going on here? And at the same time, like, when I was younger, we had these bulky desktops, and like now we have, you know, an interconnected society. We've got billions and billions of people interacting. Um, and I guess for me, it's been a great sort of 30 years of technological development where now we have like multiple devices in our pockets and in our homes and all that stuff, and it's IoT and all this great stuff. But um, I think I realized that the way we got here isn't necessarily the way that we need to go. So, my attention, what I do with my devices, how I express myself um, today uh, means that other people make money off of me. Now, kind
Right.
of why does that have to be the way that we evolve the internet? Like, why is the deal unilateral? Why is it zero sum in that way? And
Yeah.
and I don't think it needs to be. And I think it can be positive sum. I think that there is a future in which um, uh, we're more participatory as human beings as we are today, except the rewards accrue to us as individuals more than they accrue to a couple companies in Silicon Valley. I think the internet can be resuscitated as the place for as a true open marketplace of ideas, and not one that's sort of censored and one that reality is sort of composed for us. And it just so happens, and this is where I've been drinking the Kool-Aid for a while, Kevin. Like decentralized technologies and that include blockchains and cryptography and all these wonderful things are a incredible location for the development of values aligned, user aligned, owner aligned applications
Right.
that mean that users, I literally mean this, users are owners of the applications that they interact with and nurture and help to grow. Um, and like literally, it's funny, down to the incentives. Like some of the applications in Web3 writ large and in decentralized technology that my fund with my partners invest in, I mean, they are literally giving equity to users when those users sign up under a model in which the founders have 10, 15% equity instead of 85, 90%, because they realize that the opportunity to grow a global business with these new wonderful values aligned technology is so much bigger than by including users in the flow and in the incentives than it is hoarding a bunch of equity for themselves. So yeah, I think that decentralized technologies mark a new era of human progress. I think that we get a little bit too euphoric about sort of headline cryptocurrencies and whether or not they're up and to the right or volatile or whatever. Like that stuff really doesn't interest me terribly much. What's more interesting is a new world of businesses that are being built on these technologies, and I think they're going to mean a lot of great things for how we move forward as human beings.
I love it. I love it. And
Yeah.
the important question, right? Going forward, is Dogecoin going up or down?
Oh my God, that thing is like, of course, it's so amazing. It's like it starts as a joke and it grows. Um, Look, man, I mean, it's last I checked, it's like top 5 or 6 by market cap on the planet. And at once you're going, how did that happen exactly? Like I just went to bed and now it's like top 6. Um, but yeah, like it's interesting. Um, I think it has real prospect for gaining traction and utility. I think it's a symbol of what happens when a lot of people from around the world believe in a thing. I think that it's not unrelated to some of the stock market stuff we saw recently with AMC and with
GameStop.
GameStop. Yeah, totally. I think people, back to my point about the 18-year-old in your question, like, folks are paying attention, and it's not cool to get in the way of a market that is trying to make a point. It's not cool when the SEC sort of jumps in and halts trading just because. Like, I'm sorry, I thought this was an open market, and it's
Yeah.
my money, by the way. So now you
Yeah.
have this, this advance of cryptocurrencies and this really wonderful sort of Bullhorn, which is Dogecoin, which is like, you know what? It can work differently and you can make a little bit of money too. And maybe it just becomes a far more useful and ubiquitous tool to relay value to each other. So like, if you'd asked me, by the way, like a month ago, I would have said it's like, forget it. It's like, Elon, thanks a lot, and I'll see you later. But man, it's pretty gratifying to see what happens when you have a values aligned internet get together and agree that things have value and you know, build up assets.
I love it, man. So if people want to reach out to you, if you like that, or they want to learn more about your new project or anything, what's the best way to do that?
Yeah, check out Senary.xyz. That's our Senary Ventures is the business. I'm at Erich Wasserman on Twitter. That's Eric with an H. Thanks, parents, for confusing people for all of my life. But Erich Wasserman. And my DMs are open and happy to be in touch. So please do.
Awesome, man. We appreciate you coming on. You're a boss, and we look forward to maybe potentially having round two someday.
I love it. Kevin, thanks a lot for having me, and you do well.
Appreciate it.